Anyway, here are the topics that we're going to discuss. Yeah, first of all, the new 10% sales tax. Government recently announced this in order to increase the competitiveness of local goods. And next on, we'll move on to the 2024 market forecast. This is according to two financial experts. Who talk about how the US markets will perform next year, as well as the general direction of the Malaysian market. And finally, ASB's dividend. Yeah, the unit trust recently declared a dividend of 5.25%. So what does this mean if you're an ASB holder, and what are the alternatives apart from this unit trust? Okay, this and more in our final weekly analysis for 2023. And by the way, Merry Christmas, guys. As usual, not financial or legal advice. So on Wednesday, I had the privilege of inviting two esteemed guests, two financial experts, Han Liu and Mr. Sani Hamid, and we discussed a lot about investing in 2024. So the main topics: how will 2024 be for the markets? How should I allocate my investments to maximize profits? For those of you guys who've missed the insightful 1.5 hour session, yeah, the replay is now available on Spotify. So if you're bored during Christmas, you've got nobody to talk to, yeah, you can listen to our podcast now. So in essence, tonight's presentation is really just a quick summary of what we discussed on Wednesday. But first of all, let's talk about the 10% sales tax, which will be imposed on low-value online goods below 500 ringgit, effective January 1st, 2024. So for those of you guys who have anything to buy before this period, before the New Year period, yeah, make sure you guys do so, Shopee, Lazada, etc. Because after the New Year, we may just see a slight change in prices of these goods. So some pointers. Now this new tax only applies to imported low-value goods below 500 ringgit. And it applies to all online sellers, regardless of where they are located. So let's say this Malaysian seller, right? They are importing overseas watches. Then the tax also applies to them, this 10% sales tax. And the purpose of this, like I said just now, to increase the competitiveness of local products, since local products are not eligible for this 10% sales tax. And by the way, this tax is charged on each item individually. So let's say you bought a 400 ringgit imported watch online, and a 200 ringgit imported bracelet. The total tax that you need to pay is 60 ringgit, and 40 ringgit for the watch and 20 ringgit for the bracelet, even if your bill is above this 500 ringgit limit, because again, the tax is charged on each item individually. And vouchers, they kind of work differently from discounts because they do not reduce your total tax. Let's say you have a 50 ringgit voucher right now. The tax will apply to the original selling price, not after the reduction in price. Whereas discounts, they work in reverse. Okay, if the seller gives a discount, then the sales tax will apply on the new discounted price. So some notable platforms that will be affected by this new tax, we only have about 1 week remaining for this. Taobao, Alibaba, Amazon, Shopee, Lazada. Now, Shopee and Lazada, if you buy imported items, right, then you're likely to be facing this new tax and Shein as well. So during the session on Wednesday itself, right, I decided to discuss this topic with the speakers and ask them, hey, actually, will this new tax make local goods more competitive or not? And Han and Mr. Sunny, they both said that this is to level the playing field for local sellers. Because right now, overseas merchants, they do not need to pay tax when they sell items online in Malaysia. But local sellers, they are required to pay a 5 to 10% sales tax. So in essence, right, it gives overseas sellers an unfair advantage because they'll be able to price their goods significantly cheaper compared to local sellers, even if the products are in a similar category. So at the end of the day, this tax itself should increase the demand for local products, but it remains to be seen. Okay. And the next question, is this policy likely to increase prices or not? Because the 10% sales tax is not like 1 to 2%, it's straight up 10%. It may just, result in a jump in costs. And most certainly, both speakers agreed. For sellers who are reluctant to absorb those additional costs, they will just pass the burden down to citizens, okay? And in that case, we will see a jump in prices. But it ultimately depends on whether the product is elastic or inelastic. So some economic terms over here. So elastic product meaning it's highly replaceable, it can be easily manufactured, just like cheap imported watches or perhaps cheap clothing, all of this, right? If the seller decides to hike prices aggressively, then at the end of the day, it will drive away customers, which they can't afford to do so. Okay? Then in that case, for these goods, we most likely won't see an increase in price. The seller will absorb the additional cost. Whereas inelastic goods, such as very rare items, limited edition stuff, right? Those we may see an increase in price lah. But generally, we do expect some sort of bump up in price during the first few months of this implementation. Afterwards, when the supply and demand has gradually readjusted, we should see prices going back to its original state, hopefully. Then after that, during the session itself, we moved on to the Federal Reserve. Now, on December the 14th, the Federal Reserve announced that they have paused interest rate hikes, most likely done with hiking interest rates. In fact, they are looking to reduce interest rates earlier than expected. And the result of this, which we also covered last week, was a significant rally in the US market. Okay, last week itself, the past 1 to 2 weeks, the S&P rallied by 3 to 4%. And in fact, global markets also kind of tagged along with the S&P's rally. If you take a look at the FBM KLCI, which I did not include in the presentation here today, our Malaysian market also recovered 1.5 to 2% in a similar time frame. And it's important to note that the Federal Reserve's decisions are more important than you think. Okay, first of all, why is this the case? Well, the US is the largest economy in the world, and the US dollar is the most traded, most used global currency. Yeah, half of global trade and 3/4 of Asia Pacific trade are denominated in US dollars. So the next place is Euro. Euro only takes up about 10 to 15% of global trade. So therefore, any decision made by the US Federal Reserve, the US Central Bank, will have ripple effects felt across the globe. Now, this is why when you see the Federal Reserve announce that they are pausing interest rate hikes, they're looking to reduce them earlier than expected, the US market rally, then after that, the Malaysian market follow. So I decided to ask the speakers, how will 2024 be for the US market? Because if we kind of have a good general idea of how the US market will perform next year, we will have a rough idea as to how our Malaysian market will perform as well, which at the end of the day is important for funds like ASB, ASM, and a lot of other unit trusts out there. Okay, we are likely to see an uptick, okay, according to the speakers, because of the Federal Reserve's most recent pause and them expected to reduce interest rates earlier than forecasted. But as investors, we must remain cautious because we still have the two wars which are ongoing, one in Ukraine, one in the Middle East. There's still a lot of uncertainties that can pop up next year. So it's best to adhere to our own risk profile. And when investing, right? Yeah, again, stick to your own risk profile. Make sure you allocate a certain percentage to a particular asset and then follow it. So give you an example, right? Let's say if you are a more aggressive investor, you decide to have 70 to 80% of your portfolio allocated into equities. Okay, and the remaining 20 to 30%, you want to put it into low risk assets such as bonds, fixed deposits, or cash apps. And then next year, when you adjust your investing strategy, make sure you stick to it. Reassess your portfolio, allocate your cash into the assets accordingly. And at the same time, like I mentioned just now, these wars are still ongoing. Leave some dry powder for unforeseen events. So, how to position yourselves or your investments in 2024? This is one of the questions that I ask the speakers as well. Well, first of all, let's say you got right now 10,000 ringgit or 20,000 ringgit cash, and then you want to invest in 2024. Okay, the first step to this is to determine why you are investing. Okay, are you saving this or are you investing this for retirement? Or are you saving it for a down payment for your house, down payment for a car, perhaps a wedding? Okay, so you determine your specific goal first. And then after that, adjust your risk profile according to your time horizon. So let's say your plan is to save for a down payment for your house in the next 5 years. In this case, your risk profile should be closer to that of a retiree. Yeah, you shouldn't go all in on equities or volatile assets. In fact, you should go more towards those low risk assets and a bit of higher risk assets such as equities or even a bit of crypto. Then the third step, allocate your cash and never go overboard or get greedy. So these are the returns that you're supposed to aim for. If you're a conservative investor, you should target roughly 3.5 to 4.5% per annum. And if your investments are currently below Bank Negara Malaysia's overnight policy rate, which is 3%, then you certainly have to reassess your investment strategy. Because right now, with very low risk, you can already get 3.5 to 4.5%. And I can name a few assets on top of my head. So first one is ASB, ASM, right? Fixed deposits, they're offering 4.2%. Also, you have cash apps, Rise, Versa, all offering 4%, some 5%, and bonds as well, right? All of these are in this range. That's if you are a conservative investor. But what if you're a moderate investor? Then the return they're supposed to aim for is 4.5 to 7% per annum. And in this case, apart from mixing a bit of conservative assets, you want to throw in a bit of equities, a bit of ETFs as well. Whether the ETFs track the US stock market or perhaps the Malaysian stock market, or maybe investing in Malaysian banks as well, right? All of this will give you slightly higher returns, but with more risk as well. And finally, what if you're what if you're an aggressive investor? And in this case, you aim for a return of above 7% per annum. And the assets that you can opt for, maybe a bit of crypto, maybe a bit of tech stocks, new companies, etc. Oh, by the way, all those blue chip US companies, right, those belong to the moderate category. And if you're planning to have an aggressive portfolio, right, make sure you have a good mix of moderate and conservative assets as well. So right now you may be wondering, okay, what if I am about 26 years old or 30 years old? What should my risk profile be? Well, if you have a longer time horizon, then your portfolio should be more aggressive. Okay, if you have a shorter time horizon, if you're retiring soon, or if you're saving for a short-term goal, then you should opt for a more conservative portfolio because you do not want your portfolio to fluctuate too much when you need that money in a short period of time. Right, so hopefully that will clarify some of the questions regarding investing in 2024. Right now, let's head on over to ASB. Now, the unit trust recently declared a dividend of 5.25%, including a bonus of 1 cent per unit. Now, this bonus applies to all units. So effectively, the return is 5.25% for your entire sum. Okay? And it's much higher compared to FDs because FDs right now, they are offering low fours, 4.2% per annum, 3.8 to 4.2%, that range. Zero volatility risk. Yeah, if you've invested in ASB or ASM before, you'll know it is a fixed price unit trust fund that is always sold at a constant price of 1 ringgit. You don't have to worry about market volatility or price swings. So it's one of the very conservative investments that you can have and also quite a decent return also. And if you invested in ASB since January, here's how much you earn. You will earn 52 ringgit 50 cents with a capital of 1,000 ringgit to 10,500 ringgit in interest if you have a capital of 200,000 ringgit. Now, this is assuming that you do not withdraw or add any funds throughout the entire year. But, majority of the people, we don't invest like this. Every time when we invest in something, very often we tend to add funds into it. And sometimes if we need the money, we also will withdraw some money out, right? And in this case, you guys must understand how ASB or ASM dividends are calculated. Okay, they're both calculated in the same manner. So first of all, you need your total minimum monthly balance. Okay, and then after that, you add up all of that minimum monthly balance, you divide it by 12 months, then you multiply it with the income distribution rate. So let me show you a few examples. So let's say your starting balance in ASB is 1,000 ringgit. In January, you start with 1,000 ringgit, and then every month since January, you add 100 ringgit. And in this case, you see, right? In January, your lowest balance is actually 1,000 ringgit, even though you added 100 ringgit in January itself. Okay, so this is what you guys got to understand because dividends are calculated based on your lowest monthly balance. Then February, even though you added another 100 ringgit over here, you have 1,200 ringgit in your ASB account, but it takes the lowest balance, so 1,100 ringgit. So on and so forth, all the way up to December, you have 2,200 ringgit in ASB. You add up all these total units, which is 18,600. You multiply with the income distribution, 5.25 cent divided by 12, and you will get your 2023 dividend of 81 ringgit and 40 cents. So how about another example? All right, let's go. So here, let's say you started with 22,000 ringgit. Okay, and in March, you decided to withdraw 2,000 ringgit for your spending or whatnot. In this case, right, you will instantly see that your March balance is lower already. Okay, and again, ASB takes your lowest balance for that month. So March itself, the dividend is 20,000 ringgit. That's a calculation for that dividend. April, May, in May itself, you added another 1,000 ringgit, but again, lowest balance, right? So it will only be reflected the next month, June, all the way to December, it didn't change. Again, you add up all these total units, then you multiply it with the income distribution, divide it by 12, and you will have almost 1,100 ringgit in dividends for 2023. So what about bonuses? Well, in order to be eligible for bonuses, now this does not apply to ASM because ASM doesn't have bonuses. But for ASB, right, if you want to be eligible for bonuses, you guys must maintain at least one unit during the end of the year. Okay. Otherwise, if you withdraw everything out, you will not receive the bonuses. So just a quick reminder, just now, the income distribution is 5.25% inclusive of 1% bonus. So let me just show you a quick example over here. Let's say you started with 10,000 ringgit, right? And then in October itself, you withdrew 10,000 ringgit, everything basically. And in this case, your new lowest balance is 0 ringgit. So it's not really worth it to withdraw during the last few days of the month, Let's say you withdraw during 28th or 29th of October, right? You miss the entire month dividend already. You might as well just withdraw in the start of November, right? So from January to September, you add up all your units. The total units is 90,000 ringgit. And again, follow the similar formula, but now you no longer have the bonuses because in December, you have 0 units, right? And in this case, you divide it by 12, your total dividend for 2023 is about 320 ringgit. But for those of you guys who are not Bumiputras, or if you're Bumiputras and looking for alternatives apart from ASB, right? Well, the first one is ASM, okay? 4 to 5% per annum. The calculation, the dividend calculation is pretty similar to ASB. It's yearly payout and there's limited units. And for non-Bumis, investing in ASM is actually pretty difficult because you have to wait for those units to open, and sometimes they open in midnight, and then otherwise you got to wait for their announcement to open up even more units. Okay, so that's one of the biggest cons over here. Next up is Rise, this cash app, this banking app, 4 to 5% per annum. They're still running the 5% per annum campaign, but the cons over here, it's monthly payout and very bad customer service. In fact, well, use Rise at your own risk, because many users previously in early December, they've reported that their funds are not going through, transactions are not being approved, the payout is not on time. Yeah, so this app is still encountering a lot of huge issues. So yeah, if you want to dabble into it, use at your own risk. Next up is Versa. This is one of my favorite cash apps. I think you guys have heard me say it for quite some time already. 4% per annum, and it's paid out almost every day. Deposit and withdraw 2 to 3 business days. It's not insured by PIDM. And the fourth one, it's fixed deposits, back to the classic things. Okay, this one is pretty safe. I think you guys are familiar with this also. It's locked for the entire duration of the tenor, and it's a lump sum payout. But right now, they're giving 3.6 to 4.2% per annum. So every month, we kind of give you guys the best fixed deposit rates. So in this case, you just head over to our website. It's futurist.beehive.com. You'll be able to see the featured article and click on the best fixed deposit rates for December. Okay, and finally, this is Touch and Go. This is the classic also. Go Plus. I'm sure you guys, if you guys are using e-wallet, right, then it really makes sense for you guys to utilize TNG Go Plus as well. 3.45% per annum, and they pay you out every day. The only con is it has a 9,500 ringgit limit, and it is not insured by PIDM. So if today you decide to max out your Touch and Go Plus, right, you max out this 9,500 ringgit, right, you receive about 90 to 93 cents every day, which in 10 days you have 9 ringgit already. Then you can use it to buy some banh mi or delicious nasi lemak. Okay, so all these small savings, they add up over a long period of time. And that brings me to the end of my short and sweet presentation for tonight. Like I said, it won't take longer than 20 or 25 minutes. By the way, guys, I'll be traveling to Bangkok next week. Expect fewer notifications from us. Most probably won't post anything online, but in the WhatsApp group, I'll keep it updated. And there will be no weekly analysis till 7th of January. So next Sunday, don't come here because I won't be here next Sunday. I'll be still in Bangkok. Okay. And Merry Christmas, everyone. Have a good New Year. Again, thank you all so much to our gatherers, Andrew, Wendy, Edward, Alex, CC, Arshad, Caveman Balls, Calvin, Tommy, Jin Kang, Adrian, JS, Wenyan, Dean, Duhan, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, and Lukman, as well as all of our learner members. Really, thank you all so much for supporting us throughout this entire year. All right, I'll see you guys next year. Merry Christmas, Happy New Year. See you guys next. See you guys. Bye. Stay safe.